Hey everybody, this is Jim at SP500chart.com. It's a few minutes before 7 o'clock on Sunday evening, September 21st. Hey, first day of fall, is it not, or is it tomorrow? Whatever. So we got through the summer, and we are near record highs. So where were the summer doldrums? Do we turn these into fall doldrums or a winter crash? Let's take a look at the chart, see what looks to be in store. After I remind you that the website and this video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Well, here is a weekly chart, which means each candle on this chart is 1 week of trading. Now, what I'm showing you this for is I think it's important for us to see that there is a potential resistance line that we may be getting close to. That is one possibility, and you can see we have not gotten over that line. We haven't gotten over that line, period. Okay, since we made this bottom back in early actually it was late winter 2009. March 9 was this red candle right here that week, and we came up and we have been trudging up ever since. But as you can clearly see, the entire range of trading is one of two things. If we go by this lower blue line, then this entire range of trading is in a very large ascending wedge, and an ascending wedge has a built-in bearishness just out of the shape of it. Okay, the other possibility is that we ignore this extreme low set in March of 2009, and instead we look for another support line that is almost parallel to our top resistance line. It's got 1, 2, 3, 4 touches, and we spent some time underneath it. Now that time we spent underneath it sort of makes that a little suspect. Okay, so anyway, this is kind of the big picture, and this line is, I think, a very important feature in this weekly chart. I think if we see this line break, and right now it is about 100 points underneath us. If we see this line break, then I think we have to shift gears in our outlook and consider the possibility that the markets may be putting a top in. But this line has not broken yet. Now, the reason I say this is we also have this resistance line, and the excuse me, and the pattern that we have been watching so closely lately is this potential inverted head and shoulders pattern that is roughly the area that you see inside of this oval. And the reason I say it's interesting is because if this inverse head and shoulders pattern does what it should do, then we will have a target of about 2110, 2108, somewhere up thereabouts. So that'll be very interesting, because I think that target would likely need to be made while breaking these resistance lines. The reason I say that is I just kind of have a hard time getting my head around a very, very, very slow melt up to over 2100 that would happen no sooner than we would be meeting that target no sooner than about the 1st of January in 2015. I kind of have a hard time seeing that slow of a move making it. I may be wrong, but my first impression is that if this inverted head and shoulders pattern behaves, these lines stand a very good chance of being taken out. Now, what do we know about when rising resistance lines get taken out? What do we know about that? Well, we know that often that is a sign of at least an intermediate top, because this line and this line both have represented a pretty tight controlling influence over the markets, meaning that there has been disciplined buying and selling all the way up. And if we get over these lines right here, then that would tell me that likely what we're seeing is undisciplined buying. So if we power on up out of this and make this big move up, I would just let's just say I would want to keep my eye on things very carefully to see if we may be in the process of forming a top. Okay, now that's the long range thing. This is a weekly review, so let's back out just a bit and see what we can get from the chart in the way of a weekly review. Well, our week is 5 days, 15th, 16th, 17th, 18th, and 19th. We started the week at the lower support line of a channel that we had identified the previous week. And coming into the week, over the weekly review, I mentioned that if the S&P can power up over this top resistance line in this channel, that I thought that would be turning this channel in the bigger picture actually into a bull flag. In other words, we come up, we consolidate in a slightly descending flag pattern, and then we break up out of that. By the way, astute observers will see that I've changed our neckline on this. Okay? We used to be here, now we're here. Small change, but I'll explain it in just a second. So, getting back to what happened throughout the week, I think the week was a great success because indeed we did bounce on support of this descending channel, and armed with the outlook that if we break over this top line, that we should at least see a move up to test our neckline level. Lo and behold, that's exactly what happened. Now, I guess that was some luck involved. By the way, we saw a few little bull flags develop along the way. They're, in the grand scheme of things, they are rather inconsequential. Now what I want to do is I want to see if we can identify a rising channel, because I think we've got enough touches up here on the top to see that we have indeed a resistance line. Let's make this red. Now, just for jollies, let's make a parallel line to that and see if any of this makes sense. Well, lo and behold, it sort of does. Okay? So we break this bull flag, we break this resistance line, and then the week was a grand success because we started up, and we indeed did tag our neckline, which was step one out of breaking this little descending flag pattern. Now, prior to this week, actually prior to today, as we'd been examining the potential of this larger pattern here being an inverted head and shoulders pattern, which would be serving as a consolidation, continuation pattern, if you will. Here, let's describe it again. Left shoulder, head, right shoulder. Now, before today, I had the neckline defined by this second point right here. So it would have been left shoulder, head ending here, then right shoulder. This small change just does one thing. First off, it sort of lines things up a little bit nicer. It slightly shortens the duration of our right shoulder, but most importantly, I think it makes more sense because that's where we got turned back on Friday. So with you can see this level back here late on the week of the what week was that? Last week of July, very first week of July, the end of the week. You can see that is above that range, but now that we have this level right here, that just looks a little bit, I think that's a safer bet. So, whether we had it here or here, the difference is not huge. It's just that moving it up a little bit after failing to break it makes it we're just increasing that hurdle by not by a foot, or think of the high jump. We're not adding another foot, we're adding another inch to the height, making that hurdle just a little bit higher, and also making it to where a break of that line would be a little bit more secure than this. Okay? So I'm still expecting, if we get a break of this neckline, I would still expect it to be by a significant margin. I don't think we're going to do one of those I don't think I would call a 2 or 3 or 4 or 5% move over this line as a breakout. I'm looking, frankly, for something that's 15 to 20 points above this line. I think that would be a breakout. Interesting to note, we are almost at the same angle of attack of this support line right here. As a matter of fact, if I correct that line just a little bit to line up even better, it gets even closer. So guys, I think the moral of this story is this is now the neckline. I believe there is no need going forward to change that again. So we had this move off the bottom of the head coming out of this descending wedge that worked perfectly. Then we had a bull flag that lasted about 2.5 weeks. That worked perfectly. The only thing that we're waiting on to work perfectly is our inverted head and shoulders pattern. So let's just keep our fingers crossed coming into this week that we indeed see this inverted head and shoulders pattern be confirmed. Because until it is confirmed, it's not. And as just a matter of discipline, I think we need to only call a pattern a head and shoulders or an inverted head and shoulders pattern when it is confirmed. Up until the time that it is confirmed by a breakout over the neckline, then I would prefer to call it a potential head and shoulders or a potential inverted head and shoulders pattern. Now the fact of the matter is we've seen a bunch of these in the S&P over the past 5.5 years. Of the inverted head and shoulders patterns, all of which have a bullish implication, they have so far been 100%. We have had, I think, one where there was a false breakout and then we came back down under the neckline and had to spend a little bit more time there. We've had maybe 2 or 3 of various sizes where the right shoulder was very, very, very short. You'll remember I just kind of amusingly would call those shoulder, head, and flipper patterns, because there would be a fully formed shoulder, a fully formed head, and then just this little tiny appendage that really wasn't a shoulder. It was just some little tiny thing. But the fact is, they still worked the same. There's only been one Head and Shoulders top reversal that did not work. All of them worked. We had one here, we had one here, we had one here. I think we had a very tiny one here. Obviously, we had this one back that marked the top of the markets back in 2007. The only one that didn't work was this one right here that formed in late 2009 and 2010. And there's a good reason why that didn't work, by the way. And that was because we had an even larger inverted Head and Shoulders pattern back here, and that descent was halted on the neckline of this larger inverted Head and Shoulders pattern. And once we got above this little line right here, that, by the way, that was when I started doing my YouTube channel. For those of you who remember, I think that's when I started. Let me go back again. Go back to the 2-day. Hold on, 3 days. I believe that was. I think I started my channel right when we were up around right after we broke out from this inverted Head and Shoulders pattern right here, because why did I do it? Because I kept hearing all of these analysts saying this is the end, we're now going to go back down and set a new low under 666. And I'm looking at the chart and I'm seeing this big inverted Head and Shoulders pattern back here. I'm extending the neckline out. I'm seeing 1340 to 1350 as a minimum target. I'm seeing that we never made the minimum target, so I start my YouTube channel, for quite frankly, to counter the bearishness that was unfounded by some rather poor chart readers. I guess there's no other way to put it. So anyway, I'll stop tooting my horn. We're going into this week and we're looking at our neckline. We're looking for this line, hopefully, to break out this week. We are also ever mindful of our support lines that are underneath us. If our little red channel breaks here, then I think we've got support in a number of areas that should put the brakes on things, especially since we broke out of our little bull flag right here. So guys, that's the video for the week ending September 19th, 2014. I appreciate you taking time out of your day to watch this. I especially thank you for your support. And hey, let me ask you to do me a small favor. If you guys are in any stock forums or anything like that where you trade and people throw out ideas and are interested in technical analysis, I would appreciate it if you would point them in the direction of SP500chart.com. I could always use more subscribers. One of the things is, since I try to teach chart reading as opposed to just telling you what's going on, I've found that after a year or two, a lot of subscribers will say, hey, I really appreciate what you taught me. I think I'm ready to go out and try this, and so long I don't need your help anymore. And that's great. But I would like to do something to bring up a little bit more viewership, to bring up a little bit more members as well to SP500chart.com. So if you can help with that in any way, I would appreciate it. Hey guys, thanks for watching. Take care.